Good morning everybody, and thank you for joining us on Morning Markets this morning. Today we'll look back on asset market performance yesterday and just reflect on some of the key trends that we were seeing there. So yesterday saw Joe Biden confirmed as the 46th President of the United States. The upheaval with the Capitol Hill protests really failed to upset the trends that we've been seeing in asset markets over the past number of days. Global equity markets continue to move higher, and sovereign bonds continue in that gradual move lower. Looking across Europe, we saw asset markets and equity markets in particular up about 0.2 to 0.7% on the day. In the US, we had a stronger move in equity markets in particular, with the S&P 500 up some 1.5%. And a little bit more intriguingly, we saw the Nasdaq up 2.6% on the day. And as with the discussion yesterday, it was very much being driven by those more economically sensitive areas of the market, such as financials, energies, industrials, and the Russell 2000 small and mid-cap stocks. And whilst the Russell 2000 is specific to the US, similar trends are evident in other regions as well. I think the performance of the growth area, so that Nasdaq performance yesterday, is intriguing given the extent that we have seen the sovereign bond market, particularly at the 10-year yield, move out, and the yield curve continue to move that to continue to steepen. So the yield in the 10-year in the US has moved out to 1.08%. That was rising a further 4 basis points. To put that in some context, over the course of the year to date, the very few days that we've had, we've seen the US 10-year move out some 18 basis points. That just gives you a sense of the magnitude of the move that we've seen. So it is intriguing to see the growth-orientated area of the market continue to perform as well, given that as a backdrop. And we'll come on and expand on that in a future discussion. Also just wanted to touch on some of the economic data that we had yesterday. Earlier in the week we mentioned the PMI data that we've been seeing in Europe and also in the US, and the surprising strength in the US reading in particular, where we saw continued improvement. And that was borne out again yesterday in the ISM for the services sector, and that increased to 57.2 from the 55.9 in November. And that, I suppose, is a little surprising, just given the dynamics that we've seen in terms of the impact of COVID-19 on the services side of the economy. The other data point in the US yesterday was initial claims. The initial claims number came in at around 790,000 for the week. Again, pretty much in line with expectations and where it has been trending over the past number of weeks. We get the jobs report today, non-farm payrolls in the US, and that'll give us an indication of the broader sense of the employment situation in the US. And that'll be interesting to compare and contrast the dynamics there with the ADP report that we mentioned earlier in the week, which talked about the number of jobs that had been lost for the first time since April. So a bit of a divergence in the data points that we're seeing in the employment side in the US in particular. In Europe, we had surprisingly weak retail sales for November, minus 6.1% month on month. I say surprisingly weak relative to the expectations. Maybe not to the extent when we take a step back and we think about the dynamics that were happening at that point in time, particularly around increasing numbers of lockdowns and how they would be very much impacting activity during November. And we also had Eurozone inflation data yesterday, which showed prices continuing to decline, falling 0.3% for December, unchanged effectively month on month. Looking ahead to today, we'll get some, as I've touched on, the employment report already from the US, but we'll also get some trade data from Germany, and we'll also have UK house prices, and I'll come back and discuss those at the beginning of next week. Just looking to equity market performances and market performances in Asia overnight, we've continued to see positive momentum there. Japan standing out as the strongest market. A couple of things really to mention there. One, we've discussed the lockdown potential around Tokyo, and that seems to have moved forward, so restrictions there. But looking at some of the economic data, we had encouraging points on looking at household spending, so that improved in November, 1.1% year on year. Expectations had been for a decline. And we also saw the leading economic indicator index continuing to show improvement. So that gives an indication of ongoing and inching improvement. We touched on the PMIs in Japan, I think, a couple of weeks ago, and we were just getting close to 50, close to that expansion territory. So some positive movements there as well. That's it. I'll leave it there for today. Please do subscribe on our YouTube channel, and also watch out later on today for our Doing More With Your Money podcast, which will be published this afternoon. Many thanks.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.